Good afternoon, everybody. Steve Poulter here with Ghost Trades, doing our weekly summary slash forecast for next week, looking at what's happened in the past 5 days and what we think might happen in the next 5 days. And I will tell you what has happened in the last 5 trading days is almost nothing. I have never in 28 years, over 28 years of being in this game, remember seeing a market that is this flat. I wrote these figures down so I don't get them wrong. We ended the week on the S&P 500 down 8 points is all, which that has happened before, but the entire range for the week, was 53 points, high to low. Under normal trading circumstances, we'll see a range of 75, 80 points, sometimes in a day, certainly a couple of 100 points during the week. And on Friday, which was an option expiration day, which usually implies a lot of volatility, we had a total range of 25 points. The market is going nowhere, not up, not down. And you ask why, you're going to get a few different opinions. In my opinion, here's why. We are still dealing with the hangover from what some people are calling a mini crisis in the banking situation. I think there's still some uncertainty there. Some people say it was much to do about nothing, that it's not really going to affect anything else. Others say it's the beginning of something big. I don't know that it's going to be anything like 2008 because our economy is much, much stronger. But in 2008, you had to go to the bank or send a wire to get your money out. 2023, you press a button on your phone and millions of dollars moved in a matter of minutes. And we've never seen anything like that before. The technology just hasn't been there. And so we see that can affect the psyche of the market. People are wondering why everybody moved their money so quickly, et cetera, et cetera. So you've got the banking crisis situation, which is still not completely resolved. The regional banks are still continuing to show weakness. I think a lot of people thought by now they would start really rallying, and they haven't. And that's going to hurt us. 2, earnings have been doing nothing. No huge movements. In fact, you can tell how much a stock and a given equity is supposed to move by the implied volatility and the implied move by the option plays. And I looked at several earnings plays last week, and a lot of them moved half of what they were implied to move. So that's a telltale sign. We also have the interest rate, which is 2 weeks away now, actually less than 10 trading days, 10 calendar days. The Feds are probably going to raise interest rates again, so that's weighing over us. And the slowdown of the economy is absolutely, finally, really showing itself. We just hit our 4th uptick in a row, 4 weeks in a row of initial unemployment claims climbing, continuing claims are climbing, and it's just not a great picture out there. In fact, next week there's going to be more layoffs. Lyft is going to announce several more layoffs. I think McDonald's had some. Disney is going to lay off more people, and these are not entry-level positions. We did have some confessions coming out. People that worked at Meta, the old Facebook, they're going to lay off more people. And they said, I was making $200,000. And to be blunt, they weren't doing anything. So what happened was, I think all these companies got caught up in, we want to show how cool we are, how many people we hire, how we help the country, which candidly can keep the government off their back. They're like, hey, they're really helping a lot of people. Let's let them run for a bit. But these almost were fake jobs. And now they've got to answer to shareholders and say, well, we're going to have to lay a bunch of people off because they're certainly not bringing in revenue to justify what they're doing. So that's what happened last week. Like I said, we had several companies that announced and did nothing on these earnings. Netflix announced, Tesla announced, Goldman Sachs announced several companies, and while they didn't crash the economy or make the economy scream, they didn't do what they were supposed to do in the most part, in most cases. Next week, we do not have a lot of strong economic news. All we have is the consumer confidence, but we are right in the heart of earnings. We have so many earnings coming out. I just wrote a few down. We have UPS, we have McDonald's, we have 3M, Amazon, Alphabet, which is Google, Microsoft, Meta, which is Facebook, like I talked about, Roku, so on, so on, so on. Hundreds of companies are going to announce this week. And if they're going to do like last week, what I mean by implied move is there's formulas that say, okay, according to the options that have been purchased, this company, take Microsoft, is supposed to move $30 up or $30 down. And what happened last week is a company that was supposed to move $30 moved $15. So there's just zero huge moves. The volatility is at one of the lowest levels I've ever seen. However, usually a drop in volatility means that we're going to be seeing a lot of movement to the upside, and we just have not seen that. There is a saying, never short a dull market. So you want to be careful there going forward. However, it is my personal opinion we're going to continue to see bearish sentiment creeping in. Now, what happened a lot of times last week is we would open the market down, nothing huge, because again, we moved 53 points all range. The range was 53 points all week, and we finished the week 8 points lower on the S&P. That's it. That's just unheard of. But a lot of times what we did was open down and then grind up the rest of the day. What little we opened down, we grinded up the rest of the day. My opinion is this week that may change as we get closer to the interest rate hike, which everybody knows is coming. Nobody wants it. Most economists that I watch and that I listen to say that the Feds have overdone it, but there's nothing they can do now. And we're going to go into a recession the second half of this year. I am in that camp. I don't see any way we're not going to go into a recession. As these layoffs continue to climb, that means we're going to be spending money less and less in our country. And because of that, our gross domestic product is going to start shrinking, and that's going to trigger the recession. So this past week, let's review. This past week, we did nothing. Earnings were disappointing. There were no earnings that set the world on fire, but there were also no earnings that triggered huge moves one way. And then going forward, we do have a lot of earnings, but again, it'll be very interesting to see if they move the individual equities like they're supposed to. I don't think they're going to. And again, I would not expect much market movement until we get through the next rate hike if the Feds say we're done. Now, that's a week from now, but if they do that at that first week in May, then maybe we'll start to see some move to the upside. However, the old adage, sell in May and go away, is going to be there. And I just think over the next quarter, our first quarter was surprisingly strong. I think our second quarter is going to be disappointing. So I think this week, pay attention to the earnings. There is opportunity to play those earnings using options because you've limited your exposure. And then in a flat market, take advantage of your courses that you can learn, which include Iron Condors, selling premium. That way, if the market stays in a range, you can create cash flow from it. So sadly to say, I like to be a bull, but I cannot be bullish right now. I think the economy is going to drift lower for a while, especially as these layoffs really start to hit the masses. So be careful next week. There is no major economic news except consumer confidence. It's the week after that really might trigger some things. We have the unemployment rate, job creation, and the Fed announcement all in 1 week. So I don't think much is going to happen this week, but I do think we're going to go lower this week. So have a great weekend. Pay attention to what's happening in our world, and there's always a way to make money in the market. Thank you. Have a great day.